Hubert McIntosh is a member of the Society for Financial Awareness, and he's the man.
Financial literacy provided by Hubert McIntosh,
CPA.
Financial literacy. Control your financial status.
Here's your host, Hubert McIntosh, CPA.
Good evening, good Sunday evening to you in beautiful South Florida. Broadcasting from you from the beautiful city of Davie around the world. Thank you for joining us tonight. Thank you. This is Financial Literacy. I'm Hubert McIntosh, your CPA, and a member of SOFA. SOFA, the Society for Financial Awareness, with one mission to help eradicate financial illiteracy in America and around the world. One community at a time. I'm joined with SOFA to bring it to this community. So thank you. We're in Sunday school. So get your pen, get your paper. You have time to get your pen, get your paper. I'll be dropping some information on you that it will be necessary for you. You know, some programs will say to you that it's directed to one particular segment or one particular group, but tonight this is relevant to everyone, because what we're going to talk about tonight, we're going to summarize. Okay, April 15 came and it went. So we have filed our taxes. We have extended our taxes. So now what? That's what we're going to talk about tonight. Now what? That the tax deadline came and it went. We're in the studio. 954-792-1170. 954-792-1170. If there's anything on your mind, just give us a call as it relates to finance, because we are educating, we're bringing insights to you to help eradicate financial illiteracy. We're on with you every Sunday night from 9 to 10, but you have 24/7 access to us. Yes. Financialliteracy.info is the website. Financialliteracy.info. You can check us out there. We have a link directly to your media pages, the social media pages. You can link there directly to Facebook, Twitter. Yes. So we'd encourage you, like our page, because when you like our page, what happens, it helps the crawlers, so people who are seeking financial literacy information will be able to find us easier. So thank you in advance for liking our page. Don't keep us a secret. Share us with your family, share us with your friends. You still have time to You just share, mention to someone, hey, the CPA's on. He's talking tonight about taxes, financial literacy. Spend the next hour with us. If you have a question, give us a call, 954-792-1170. And remember, on the website, financialliteracy.info, we also have a YouTube channel. Yeah. All the programs that have aired since January 1, 2017 have been posted. So if you have missed something, you may see a topic that you may have missed, you can go on to YouTube, go onto the YouTube channel, and you'll find it. And we'll also encourage you to subscribe to the YouTube channel. Why is it necessary to subscribe? It's free. Let me point that out. There's no cost to subscribe. And it's not something that we're going to bombard you. We're not going to blow up your email. But what happens anytime a show has been posted or anything updated on the YouTube channel, you will be notified. You'll be notified, and that's the reason for that, so the subscription will keep you updated. So thank you again for joining us. We're in the studio, 954-792-1170. So the topic, taxes. So some of you have filed your taxes. Some of you have extended your taxes. And some of you have not filed your taxes. Yes, I know that. Some of you have not done anything. You have not filed. You have not extended. You have not done anything. Maybe you didn't have to because you didn't have any income. Okay, that's understandable. Or maybe you didn't because you want to hide your income. That's not so understandable, because so many people will choose to try and hide their income. But you do that for a few years and it affects you in the long run. It affects you in so many ways. So many ways. I see a lot of independent contractors. When I say independent contractors, I don't necessarily mean someone in the building construction or anything like that. But independent contractors, anyone who is self-employed, where basically you report your own income. Somebody else is not reporting your income. You're reporting your income. And a lot of times people do this and they feel like, well, since nobody's watching me or nobody can know how much I make, I'm just going to report what I want to. Well, that's your obligation. Each person has their reason why they report or not. But a lot of times, and as the great CR was on earlier talking to you about real estate. And, anytime you want to know about real estate, you cannot find a better person than CR. One of the first thing, and CR keep reminding you guys about this, one of the first thing you're going to need, if you're going to buy a house, you're going to need to show some income. You're going to need to show some income. At least 2 years income you're going to need to show. So imagine you have not been reported any income, but you feel like you want to buy a house. Well, let me tell you, it's going to be very difficult to almost impossible for you to get a house financed without 2 years of income. So you ask yourself, you were not reporting any income, but now you want a house. So what are you going to do? You're going to wait 2 years? The market is so good now. The opportunity is great. It's one of the great market we have now in real estate. I'm not a real estate professional, but I see the trend that's happening. You have some markets where it says, well, it's a buyer's market. You have some market where it says it's a seller's market. And you have markets where it's just win-win. Now it's a win-win market. It's where the seller benefit, the buyer benefits. You're going to have other markets where basically it's a seller's market. And then you're going to have other markets where it's a buyer's market. And that happens where, like, for instance, with inflationary prices and so forth, where prices are going down, but that's not the situation right now. We have a good market, but there are a lot of benefits in owning a home. Right, but check with CR on that, and he can give you the ups. He can give you the ups and down on that. Whereas there are a lot of programs. There are a lot of programs right now in getting mortgages. There are lots of programs. It's in the sense it's not just a 1, 2, 3 where someone will say, well, you can't get this or you can't get that. There are a lot of programs. So that's why I always recommend that you speak to a professional. And you have someone like CR right here, gives his time every Sunday night from 8 to 9, where you can contact him here, and he has given himself make himself available to you. So explore that. So let's move back to taxes. So if you have not filed, remember I was talking about people who have not filed, whereas sometimes it could be a detriment to you there, and also for later years in life, whereas for Medicare and Social Security, you have to have 10 years in the system. You have to have 40 credits. So that's besides that. So that's just a little rabbit trail we went down there. But we're going to focus on the people who have filed, or they filed a return, or they filed an extension. So let's talk about those who have filed. So you have filed, some of you paid, some of you got a refund. All right, so what? What does all of that mean? You got a refund, some of you paid. What does that mean? All right, the taxes that you just filed is for 2017. So now we are in the year 2018. The next tax return you're going to file as an individual or corporation income tax is going to be for 2018. But what's different about this year versus the previous years, whether it was 2017, 2016, 2015, 2014. What's different this year is that the tax laws change. The tax laws changed December 20th, 2017. The tax law changed, and it is now it's now for 2018. So what you filed for in 2017 is going to be different in 2018. Some of you have filed with a professional, some of you have filed by yourself, some of you have even gone on a free site and you have filed there. But one of the key things that should have happened, and I'm not sure if every software does this or every tax professional does this, but if you had a tax professional, a good tax professional, or a good software, I'm not gonna bash any software, but if you had a good software or a good tax professional, what you should have seen in your most recent filing is a comparison. What that is, the comparison is because most good software implemented the changes for the new tax law for 2018. So what they would have done on a summary sheet on your tax return, you should have gotten a summary sheet, a comparison sheet rather, not a summary sheet, a comparison sheet showing, well, this is your number for 2017, and that comparison sheet should be showing you, well, if these numbers are the same for 2018 based on the new tax laws, then this is what your number should be. So what that means, in the sense that if you got a refund based on 2017 laws, then using the 2018 laws and the same numbers for 2017, it should have shown you a comparison to show you, well, based on these results for 2017, then this is what it would be for 2018 if nothing changes. One of the beautiful things about that is that when you have that comparison, you can stop and you can look at your situation and you can say, well, wow, all right, well, if nothing changes, this is what 2018 tax return will look like. And it's either, well, it's a greater refund, a less refund, or a greater debt or less debt. But the great thing about comparison is that you have the opportunity to make some decisions. Yes, you have the opportunity to make some decisions. I know some of you is going to look at it and you're just going to look at it and you're not going to make any decision. But that is the purpose why we come on alongside you on Sunday nights, so that we help you to change that behavior, to change that attitude. Because if you're going to look at it and you're just not going to make any changes, then we are hoping to come alongside you and give you some wisdom, give you some insights. Because every person that files taxes has an opportunity to do something different for 2018. Every person has an opportunity. As I said, you may owe more, you may owe less, you may get a larger refund, you may get a less refund. But that is the fact. That's what that is, and that's what's showing. But here is where you can make a difference, because you can see the fact based on what it is now, but you can change the outcome. Yeah, you can change the outcome with different strategies. There's so many strategies. There's so many strategies that you're going to have. And we're going to talk about some of them. We're in the studio, 954-792-1170. 954-792-1170. Give us a call if there's something on your mind, something you want to share. Share your experience. What happened with your filing? Did the filing go as you expected? Did you get the refund that you expected or not? Because keep in mind, any question or concerns you may have, when you call, you're helping others. Because believe me, whatever question or concern you have, you're not the only one with it. Other people had that too. So when you call, you're helping others who did not choose to. Okay? So let's talk about some of the opportunities. Let's talk about one of the number one opportunities we're going to look at. So what we're looking at, what are the two major changes? There are two major changes for individuals. Two major changes. All right. The standard deduction. The standard deduction has doubled, right, from 2017 to 2018. So for married filing jointly, it was $12,700 for 2017. That is now $24,000 for 2018, the standard deduction for married filing jointly. For single person, for 2017, it was $6,350 for a single person. But for 2018, that is now $12,000. So the standard deduction has basically doubled in both cases. From 6,000 to 12,000 and 12,000 to 24,000. So that's one of the plus. But what's one of the minus? The personal exemption, which was $4,050. The personal exemption is gone. It's gone. So mom and dad, remember I gave the example, mom and dad with 2 kids, that would have been 4 personal exemption, because each person had a personal exemption of $4,050 for 2017, but that exemption is gone. So mom and dad has lost $16,000 there. If you look at it that way, $4,050 times 4, mom and dad has lost $16,200. But they have gained $12,000 with the standard deduction. So you see what I'm saying? Here's an example with mom and dad. It did not benefit them greatly if you look at it that way, because, okay, 12,000 went to 24,000, so they gained 12,000, but they lost $16,000 in personal exemption. While another person, or the single person, if you look at it this year, $6,350 was the standard deduction, and the personal exemption was $4,050. So that's together is $10,400 with a combination of the personal exemption and the standard deduction. But for 2018, that single person now, that $6,000 is now doubled to $12,000. So even though they lost the personal exemption of $4,050, the $12,000 is greater than the $10,400. Okay, so I just want you to have an idea of that, where, so it's not that where you hear, well, oh, this has been doubled. This has been doubled, so that means it's better. So if you look at the single person, yes, 10,400 to 12,000. So that single person gains $1,600 in deduction. Remember now, be careful. The $1,600 in deduction doesn't mean taxes. Yeah, you're looking at me like you're shocked. The $1,600 is not taxes. The $1,600 is deduction. You now have to calculate the tax rate. If you're in a 10% tax rate and you have $1,600 deduction, your taxes, your benefit is $160. While if you're in a 25% tax bracket with $1,600, your benefit is $400. So if you look at it there, you're talking $160 to $400. So it's not as great as you may think, because you have heard it touted and it says, oh my gosh, this was this great tax. But I just broke it down to you for that individual person. It wasn't great for that particular individual. It wasn't great for mom and dad, because mom and dad lost. Mom and dad got an extra 12 with 2 kids. They got an extra 12, but they lost 16,000. So you may be saying, "Wow, Hubert, you're just being you're just bringing doom." No, I'm just giving you the facts. So you have that single person. It wasn't great for them. Mom and dad with 2 kids. It wasn't great for mom and dad, because mom and dad lost out on the personal exemption. So the question then, was it great for anybody? Yes, it was. All right, let me give you the example now. So take now that single person. We're going to use a single person, whether it's male or female. We're going to use a single person using that same situation where mom and dad had 2 kids. So we're going to use that single person that has 2 or 3 kids. All right, since we're talking about 2 kids, let's keep it to 2 kids. Or since we were talking about 4 exemption, let's use that single person with 3 kids then, right? To keep it consistent with this 4. So what's the benefit? Here is the benefit, and here is what this tax bill was sold, where the pundits would say, wow, this was great for people. So listen now. So here's this single person with 3 kids under 17 years old. The tax credit, the child tax credit was $1,000 per child, right? So that person now who has 3 children was getting $1,000 per child. And this is tax credit now, not deduction. This is actual tax, right? So one of the things I want to educate you and keep you mindful of is that a deduction is different from a credit. Anytime you get an opportunity to choose between a deduction and a credit, if someone says to you, oh, well, you can get $1,000 in deduction or $1,000 in credit. In most cases, the $1,000 in credit is going to be better. You notice I said in most cases. Because there's nothing that's absolute in that sense to say it's in all cases. So in most cases, the credit is going to be better. But remember, I hope you guys are taking notes, because I'm throwing so much at you. I hope you got your pen and your paper. Remember, There are two types of credits. You have refundable credits and you have non-refundable credits. So the situation there is also different. So you see, as I'm showing and going through these examples with you, do you see why it is so imperative that you get a tax professional? I'm telling you, it is so important, because sometimes you're thinking, well, I'm just going to get the software. I'm going to buy the software for $39 or $49 and I'm going to do the taxes myself. But you're going to miss the insights. You're going to miss tax planning. Tax planning is so powerful in the sense sometimes you can spend $300, $400 for tax planning and you're thinking, well, I didn't have to spend that. But sometimes that $400 that you're spending for tax planning can give you $5,000, $10,000. So you got to be careful about being penny wise and pound foolish. In a lot of cases, initially you may hear me say, well, you spend $300, $400. But in a lot of cases, you can start with a free consultation. Because like in our office and many professionals, your initial consultation is free. Because it's kind of hard sometimes for you to pay something. You're going to pay for something and you don't even know what the benefits are. But with that, utilizing that free consultation, you have an opportunity where that tax professional can tell you if it will be beneficial. So I want you to evaluate that instead of just making a decision and says, well, that's not going to be good for me because this is going to cost me. Before you look at the cost and turn your nose down at the cost, try to identify the benefits. Try to identify the benefits. So you see what I'm sharing with you now, where you're talking about personal exemption, standard deduction. That in of itself, which is part of the easiest part of the tax code, but that in itself is complex. Because your situation is different from the next person's situation. Because a lot of factors come into play. You know, what's your income? Your income is also a strong factor. Okay? So keep that in mind. So back to the person with 3 children, right? The single person. Because now that single person, here's one of the benefits for that single person. Now you may say, well, I'm not celebrating that they're single. Please, no, that's not what I'm saying. The facts are the facts. They're a single person. They're a single parent, okay? You know, that's not something to celebrate, the fact that they're single. Yeah, but then again, that's another topic again. Another single person may say, well, I'm glad that I am single because my spouse was this or that. That's not the part we're talking about. We're talking about the numbers, okay? So don't go say, well, this guy is saying it's good that I am single. No, that's not what I'm saying. Oh my gosh, I tell you this every Sunday night. I tell you, the fastest hour of every week is Sunday nights between 9 and 10. I've just started giving you the summary and it's time. We're midway in where we're going to step aside and we're going to pay some bills. So just hang in there. We will be right back. Welcome back. Welcome back. Thank you for sticking and staying with us. We're in the studio. This is Hubert McIntosh, your CPA, a member of SOFA, the Society for Financial Awareness, with one mission to help eradicate financial illiteracy in America and around the world, one community at a time. And I've joined SOFA to bring it to this community. So thank you. We're in the studio, 954-792-1170, 954-792-1170. If you have something on your mind regarding finance, give us a call. Give us a call. Share with us. Tell us your experience in this past tax season. What were your surprises and what were your pluses? And I'm sure your other listeners would appreciate you sharing. So, thanks. So, as we're continuing with that single person with 3 children, we were talking about what's beneficial, who benefits from the new tax law. So, that single person, remember we talk about the single person where the standard deduction goes from $6,350 to $12,000, and for the married person, it goes from $12,700 to $24,000. So now a single person with a child as a dependent is considered a head of household. So that's a different category. So this year that was $9,600 for the standard deduction. So this $9,600 is now doubled to $18,000. So you see what's happening there? $9,000 is doubled to $18,000. But remember, it's 3 children. So the $9,000 doubled to $18,000, right? So you got $9,000 there. But with 3 children, that's still 4 exemptions. Remember, we talk about the exemptions. Each exemption was $4,050. 4 exemption is $16,200. So that single person, even though they gain $9,000 in standard deduction, they lost $16,200 in personal exemption. So right there, they're in deficit there by $7,000. But that's deduction. But what has happened now? If the children are under 17, you have child tax credit, where a child tax credit was $1,000 per child, which was $3,000, right? 3 times 1 is 3. 1,000 times 3, 3,000. But that $1,000 for 2018 is now doubled to $2,000. And this is tax credit, not deduction. So instead of that person getting $3,000 for tax credit, they're getting $6,000 for tax credit in 2018. $6,000 for tax credit. And remember, I said to you, don't confuse credit with deduction. This is a credit. Okay? I know that can be a little bit confusing because sometimes people think they're one and the same. Child tax credit is where you get $1,000 per child for 2017. But for 2018, it's now $2,000 per child. So now that's gone up to $6,000. So we have identified one particular person that the new tax law benefited. And it's that single person with kids under age 17 because the child tax credit doubled. The earned income credit is just around about the same in that sense. You know, that person's still going to get earned income credit. And that's for people who makes with income under $40,000. If your income is over $40,000, you're not going to get any earned income credit. Okay? So that's one example. So your situation, each person's situation is not the same. So seek counsel, seek guidance, contact us. Contact us. We'll help we'll shed some light on your particular situation. We're in the studio 954-792-1170, but you have direct access to us. 754-366-7311. 754-366-7311. That's direct access by phone. You have access to us on the web, financialliteracy.info. Financialliteracy.info. You can go on the web. You can reach out to us. You can also email us. support@financialliteracy.info. support@financialliteracy.info. You know, we provide you with an initial free consultation so that we can help you assess your situation. Because some situation we may be able to guide and help you. Some situation we may not be. You know, but it's always good to get the advice so you know where you stand. Okay? So that's talking about deduction and credits regarding children, standard deduction, and personal exemption. But we're going to move to another one because I want to address this. A lot of you are doing the 401k. You're doing the 401k, and in terms of government, people in government and non-profit, some of you are doing the 403b, some of you may be doing the 457, with teachers and, non-profit organization and government workers. Some of you have the option to do 403b, you have the option to do 457. They basically, the 403b, the 457, the 457 and the 401k, they basically all work similar. They, in the sense that the amount that you contribute to them, you get a tax deduction. But remember now, I want to bring this to your awareness. If the standard deduction is going up, it's doubling to 24,000. Doubling to 24,000 for the married person. It doubling from 9,000 to 18,000 for the person who's a head of household, and it's doubling for the single person from 6 to 12,000. One of the things you have to be aware of, in the sense that you may need personal guidance on your situation, in the sense that you may be contributing to a 401k thinking you're going to get this deduction, but be cognitive of the fact that you may get a deduction, but it doesn't affect your taxes. And you're right, like, whoa, what are you talking about? If I get a deduction, it will affect my taxes. No, not necessarily. If you're already in a particular tax bracket, if you're in the lowest tax bracket, or you already have enough deduction, and then you are now contributing to your 401k or your 403b, and you're not getting the ultimate benefit of it, then you may be wasting a deduction. You may be postponing taxes where it may be better for you to pay your taxes currently. Yes, and I know that, because that's just a general statement, that it's just hard to quantify it generally. It has to look at each person's situation, because it all boils down to your filing status, your income. Your income is important. Your filing status is important. What other deductions are you already getting? Some of you may have a HSA, a health savings account, and you're getting that health savings account deduction. So you see where it's not this where one situation, it doesn't fit it doesn't fit everyone the same way. And that's why I keep talking to you about the personal economic model, that it's very important that each of you develop a personal economic model, because you cannot use your situation or use somebody else's situation and says that it's going to be the same. You cannot use that. There are so many different factors, Your income is one of them. Your filing status. Are you filing single? Are you filing head of household? Are you filing married, filing jointly? Are you filing married, filing separately? Are you a W-2 employee? Are you self-employed? There's so many factors that I recommend that each of you get a personal, you need a personal plan so you can develop a personal economic model where that it's structured to your specific situation. Okay? So you can evaluate that. You may be contributing too much to a 401k. And somebody would say, but wow, what do you mean too much? I want to save more. Yes, but here's the thing. You may work somewhere where you're only being matched 3%, or you match 6%, but you're gonna go ahead and you're deducting, you're contributing 15%. You may be wasting that, because one of the things you have to look at is that when you're contributing to a 401k, you have to think about the restrictions. And here it is again. It depends on your age. So here's age as a factor again. Take a 40-year-old person. Let's use a 40-year-old person. We can use any age. But let's use a 40-year-old person. That 40-year-old person contributing to a 401k or a 403b, you know what? You have restrictions to age 59 and a half. So a 40-year-old person has a 20-year restriction where if they choose to touch that money, then they're going to pay a 10% penalty. Do you see what I'm saying? So if you're being matched 3%, but you're going to go ahead and you're going to contribute 18%, maybe you could be putting your 15% in different vehicles that's going to earn the same amount, but with less restrictions. These are the factors. You know, that's with 401k, 403b, right? We're in the studio, 954-792-1170, 954-792-1170. Not a situation we want to talk about. That's why the topic tonight is aptly named, okay, you filed your taxes. Now what? So what? What are you going to do for planning for the rest of, we are at what's today's date? We're at April 22nd, 1 week after the tax deadline. So what's your planning? Are you just going to sit and wait back until next year when you file again? And then you're going to go and you're going to go do your taxes and you don't know what the results should be? You should know the results before you file your taxes. That's what tax planning does. You shouldn't be going to file your taxes and wondering if you're going to owe or wondering if you're going to get a refund. That's bad planning. If you are getting proper planning, you know whether you're going to owe. You know whether you're going to get a refund. This is not something like a scratch off where you buy magic ball or thing and you buy these thing and you scratch off and you're gonna wondering what's under it. No, This is not a mystery. If you are operating like it's a mystery, then tax planning is significant for you. You can know these things. You don't have to wait until the person filed your taxes for you to know. You can know in June. You can know in July. 2018, you can know right now what your tax situation is going to be when you file next year. You don't have to wait until then and get surprises. No. So I'm encouraging you. Please get some tax planning guidance. Get some guidance. Another one I'm talking about. So you're getting a refund. So you got a refund. You just filed your taxes and you got a refund, right? So you got $2,000, $4,000, $5,000, whatever the refund is. But let's talk about your refund. So you got your refund and you were happy, right? So you got $5,000 in refund. Let's say $6,000. You got $6,000. So you got $6,000. You were happy and you're doing the dance. You're doing the dance. Wow, I got $6,000. So you're doing the dance because you're happy. And here I am telling you that's bad financial planning. You got $6,000 in your refund. And here I am telling you that that was bad financial planning. Because you got $6,000. Did you get any interest? Did you get any interest? So what you're telling me, you gave the government $6,000. You gave the government $6,000 to keep for you. And the government didn't give you any interest? Really? You just filed your 2017 taxes and you got $6,000 and you're doing the dance. And if you look at the market, the average return last year for 2017 was 21%. 21%. You want to do the math on that? So you got $6,000 when you could have gotten 21%. 21%. What's that? That's what? $1,260 in interest you could have gotten. Is that sinking in? $1,260 you could have gotten, but because you did not make any plan, you're dancing that you did good because you got $6,000 in refund, and you could have gotten an extra $1,260 if you had taken that money where you could have taken $500 per month. Because that's what you did. You gave the government an extra $500 per month last year because 500 times 12, that's why you got $6,000. It wasn't anything magical you did why you got $6,000. It wasn't magic. You gave the government money extra to keep for you and they didn't give you any interest. How does that make you feel? You want to keep doing that? So you could have gotten $1,260. That's just last year. So in 10 years, you could have gotten, not that every year it's going to be 21%. That's not my point. That's not what I'm saying. It's not going to be that every year, but we're talking about 2017. 2017, the market went up 21%. 21% you could have gotten, but you didn't participate. You didn't participate in the market. Why not? Why not? I don't know. You have to answer that yourself. I don't know the reason why you didn't. But now that you did that, now that you heard what you did wrong, what you going to do about 2018? Are you just going to accept it like that? What are you doing regarding your retirement? Oh my gosh, you're going to say, well, I'm 40 years old. I'm not thinking about retirement. Well, let me tell you something. You're 40-year-old today. Let me tell you, that 20 years comes so quick. That 20 years comes so quick. It's amazing. It's amazing how fast that 20 years come. Whether it's 20 years, 25 years. Because remember, one of the things we're talking about, you're wrestling with two types of lifestyle. Remember we talk about that? This is what we're talking about with the personal economic model. Because what you're wrestling in is with two lifestyle. You're wrestling with your current lifestyle and your future lifestyle. Every one of us. Every one of us. This is none of us is exempt from this. Every single one of us is wrestling with two lifestyle. Current lifestyle, future lifestyle. Because let me tell you, one gonna take from the other. Because if you just focus on your current lifestyle, let me tell you, this is just a sad topic. I'm telling you. If you focus just on your current lifestyle, and I just have to administer tough love. I have to say this. Some of you going to get upset with me, but I'm just telling you the truth. If you just focus on your current lifestyle and you don't do anything about your future lifestyle, you want to know the truth of the matter? You better hope you die early. And that's tough. That is tough love. That is tough love, because you're like, oh, Hubert, you're wishing me. No, I'm not wishing that you die early. But if you are focusing just on your current lifestyle with no consideration for your future lifestyle, and you live long, so you have no retirement, you make no plans for your health conditions, and you just think your future lifestyle gonna take care of it by itself? I don't know how else to say this other than saying you're being delusional. Because your future lifestyle can't take care of it by itself. You, yes, I'm looking at you. You have to play a role in it. Your future lifestyle cannot take care of it by itself. You have to play a role. You have to make some sacrifice. You have to take some stuff from your current lifestyle to put to your future lifestyle. If you don't do that, you're in for a sad future. I'm just delivering this with love, and I know it's tough. It seems hard to listen to, but you have to participate. You have to participate in it. You know, you have to participate in it. You know, Pat Riley, we are here in South Florida. You know, Pat Riley, the great basketball coach, there's a saying that Pat Riley, I don't even know if he coined it. I don't know if he coined this, but it's Pat Riley, I remember saying this. It is imperative that everyone participate in their own rescue. You have to participate in your own rescue. You have to. You can't just expect people to rescue you and you're not participating in it. It is imperative that you participate in your own rescue. You know, so it's Hubert McIntosh, your CPA, delivering tough love. I love you. That's why I'm talking to you about this. So remember, visit the website financialliteracy.info, financialliteracy.info. We are here with you every Sunday night from 9 to 10. But visit the website. You can contact us directly, 754-366-7311, 754-366-7311. Thank you for joining us. We love you. We will see you next week. Thank you for joining us. Have a great evening.
1170 has come to an end. Don't be mad.
He'll be back next week
On
www.waves1170.com.
Hubert McIntosh is a member of the Society for Financial Awareness, www.sofaUSA.org,
Promotional consideration provided by
LifelineTax.com, the Remap Accounting Firm, the Wealth Management and Distribution Group, and the McIntosh Insurance Agency.
Financial Literacy on Waves 1170 AM
Is a digital media production by Hubert McIntosh.